Good morning, everybody. Today is Thursday, July 23rd, and this is our pre-market analysis with QOL Trading. If you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video, and you can come and you can join our, go to our website at QOL Trading, put your name and your email address in here, and you will get, subscribe free for our weekly newsletter that we put out on Sundays. And in the newsletter, we go over the week in review, geopolitical news, any economic data, and what's ahead for the week ahead. So what's ahead for the following week. There's I cover broader markets. I cover all different levels of the Mag 7, Tesla, of course. I've been covering SpaceX lately. And it's very informative and it's free. So put your name and email address in there so you can get on that subscription email list. Down below here, if you want to learn more about what we offer as far as mentoring traders, learn how to day trade. We take you from start to finish. You can click down here for learn our strategy, and you'll get a free consultation with me so I can find out where you are in your trading journal. If you want to join our Discord community, you can click either here, the live trading desk, or the Discord symbol, and it will take you to our sign-in page. And in the sign-in page down below, lower left-hand corner, you can sign up free for our Discord channel. Then if you want to get access to our live trading from 9:30 a.m. to 11 a.m., you can click up here in the right-hand corner. And then if you want to get access to our new QOL ORB Scalper, ORB stands for Opening Range Break, you can sign up down here and you get access to that. And then if you want a bundled package, you can just click on the next page here and get a package for both the indicator and access to the live trade desk. That is, the live trade desk is 9:30 a.m. to 11 a.m. Monday through Friday for the every day. So come on and check that out. Anyways, let's get into it. Economic data for today. Nothing earth-shattering that I see on here for today. Everything is all about earnings. The earnings is starting. Next week is going to be a big amount of companies that are going to be reporting. Unemployment claims came out 187,000, expected 211,000. Actually, I think that is going to rock the market personally in the negative way. It just indicates interest rate hikes coming, right? So, yeah, I'm right. It's actually not too positive for the markets right now. Anyways, let's get into it. We'll finish up for the week here. Nothing on the docket for tomorrow for economic data, but that being said, let's get into it. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video, and then go down to the description there so you can join our Discord community, our live trading desk, and get access to our scalper indicator. Let's start out with the VIX. I'm sure that's going to be elevated right now. Yep. Okay, so here's the VIX. It's approaching this 200-day moving average, sitting, call it at $18.75. If you get above that, you got a 1955 in place there. I think today is going to be a messy day. Combined with that unemployment claims that just came out, along with the earnings that happened yesterday with Google and Tesla. That's going to be dragging things down a little bit. But, I think that the bullish structure is still intact, but we'll take a look at things. So you have a gap up here, gapped up from the 50-day moving average of $17.28. So you like to see us pull back here. We still have a gap up from July 10th at $15, and that, those gaps tend to fill at some point or another. So we do have some gap downs here at $25.74 from April 8th, and I think we have one last one at $30.34. So the market, if the VIX does get up there, it's elevated. That means that the equities are pulling back and flushing. So we'll get into oil real quick. Oil is elevating too. Lots of talk right now. Here we go. We're pushing back up into this gap down here at $96.99 a barrel. I don't know if we have anything above that. No, that's the last gap down we have there from May 22nd. So wouldn't be surprised if we push up there with all the heated talks going on with, every time Iran hits a ship, I believe our administration said that they were going to take out one of their bridges. So, big, everybody's sticking out their chest right now. And, you know, to me, you know, I'd like to see something come, you know, some kind of deal happen, but just all the years following that stuff in the Middle East, I just think, unfortunately, it's a lost cause here. So as far as oil here for us on the retail side of things, you want to see us lose this 100-day moving average, $89.71 a barrel, and then pull on back down here to get down to this 20-day moving average at $76.05 a barrel, on top of the 200-day moving average at $75.03 per barrel. Let's get into the ES now. ES, yep, off the number. This is definitely all based on that unemployment number, just kind of indicating in the body language is probably going to lean towards rate hikes, more rate hikes possibly. So got to hold this 74.69.50. If we lose that, 74.27.44 is your next line of defense right there. On the upside, if you can regain this 74.96.50 today, then I think you could push back into these moving averages. You can see the 20 and the 50 are right on top of each other. Call it at 75.33 and change. A pop and fade, 75.29 would not be a bad pop and fade. It's a low from July 7th, what was it, a couple weeks back. But you can see the market is really pushing down hard right now, even though it is pre-market. These numbers right now are going to, the numbers with the unemployment are definitely going to impact today's trading. So watch yourself on today's trading here. I don't think it's a complete loss. I mean, I think that if you fan out here a little bit, you can see we still have a little bit of a structure here, bullish structure. I think if we can go to let's go to a monthly. That's not good. Well, I mean, here's your monthly right now. I mean, look at this. Let's get out here. Let's go weekly. Weekly looks better. Yeah, so look at this is a weekly chart here, people, right? So yeah, it looks like, you know, when you're looking at it at a tiny macro level here, it looks like the sky is falling. But look at this. This is fantastic here, right? So your bullish structure is still intact right now. So you could be looking for levels that are, you know, pullback longs. Do you want to get in front of a moving knife? No, you don't. But, you know, you just wait and see. Don't be the first one to the party. Wait till the markets, you know, the buyers start dipping their toe in the water, and then you can get in there and follow. And then as long as you have your proper risk factor in place, and then your stops, then you're going to be good to go. So don't be afraid to make a trade as long as you have your risk intact. Okay. Let's get over into the SPY. SPY is going to be identical, right? Just different numbers. 740.05 must hold. That's a low from July. If you lose that, you can flush down to 736.53. As a matter of fact, I even talked about that flush yesterday. This is a level I actually like. Below that, if you lose that, 731.75 is your weekly low from May that you have to hold. So I think that this is going to be a big level here that you're going to need to hold. We're going to call it. Let's get on there. There you go. 740.80. If you lose that, you're flushing. That's the bottom line. If you hold that, you could actually use that as a level, 740.80 with your stop at 740.08, right? Tiny stop and $3 pop into that high from May 15th. That wouldn't be bad. If you lose this, we're flushing. Simple as that. Nothing down here for quite a while. What do we got here? Nothing, right? So that potentially could flush. But speed zones, it's creating a speed zone, so you got to watch that as well. Sitting below the 20-day moving average, as long as we're below that 20-day moving average at 748.67, you're looking for pop and fades, right? Or you're going to be looking for a huge flush and then wait for the buyers to step up. But below that 731.75, I won't have anything until this regressional trend line here, 724.15. I do like this midline regressional trend line. It still keeps the bullish structure intact because it's a midline regressional trend line. And this is here from October 13th of 2022. Below that, where is that lower end? That lower end must be a lot lower. There we go. And then below that, so then if you lose that 50 mid-range right there, then we don't have support until 671 for that lower end, right? So key levels here, gotta hold, where is that 50 that I just hit? I'm sorry. Oh, all the way down here. So there's still room to flush, right? So I would just be careful today, and no need to be clicking the buttons right out of the box. Just let the market show you the direction that it's going to go right now. So getting over the Qs right now, the Qs are still flushing as well. This June low, we talked about it yesterday, 28,512. We've been talking about it on most of the charts. If you lose that, flushing down here to the 100-day is 27,926. and change, right? So that would be a flush right there. And then unfortunately, if you lose that 100, I have to go and do some levels right there. I don't anticipate losing the 100 today. That would be just a massive correction. I just don't see that in the charts here. But as we get closer, I'll start going further out, because if you look at, like, I fanned out on the what did I fan out on? I think I was on the SPY I looked at, but let's go over here. Let's go 3-year weekly. Same thing, same structure. Yeah, I think we're talking about the ES. So this June low is really key. You're going to have to hold this June low. If you lose that June low, I think you got a 28,192 level that'll come into play right there. And so that's another 600 points of a flush. So that's going to be key. Actually, this, what is this? Is this July? Yeah. All right, so July's low. I think we're going to be in jeopardy of July's low right now. And then, which is this 28,408 level that I was talking about right there. So if you lose that, 27,927 would be the next target. I don't think it gets there right away, though. Okay, let's go look at the Qs. Qs are going to be the same thing. And you got to hold that June low, 686.37. And you could flush down there today. If you lose that low right there, I do like, I was talking about this yesterday, 670.04. It's an April high also, so it's a break and retest. I like that flush to that level. So you can be patient, set an alarm. If it gets down there, come on down here and come on back to your computer, and then you can take a trade. Upside, can't think about upside until you get above that 705.80. And then if you do get up there, I think a pop into that 711.10 would give you a good pop and fade. We're below the 20, below the 50, the 20 sitting at 714.25, the 50 sitting at 719.17. As I said yesterday, when you're below your moving averages, your thesis coming into the day is looking for pop and fades, right? So yesterday you had a nice little, ABC pattern here, right? But you're still looking for that pop and fades, right? Not just because it goes up for a day doesn't mean it's going to continue to go up, and that your strategy of pop and fades is not intact. So if you did take that strategy yesterday of pop and fades and you had your decent levels, you could have been trading here yesterday and saying to yourself, oh, I'm going to wait till it gets to the 711.10 level and then take a short. It's okay if you miss a trade, right? Just make sure you're trading off of your levels. I think that heading down to June lows is probably going to happen. 686.37 doesn't necessarily mean it's going to happen right away. You're going to have to, you probably have to hold. If you flush through these lows from Monday, then I think you can flush down here to 686.37. The market could pop on us too, people, right? There is some decent volume down here right now, better volume in the pre-market than normal, right? But watch from the market. It is pretty extended on the downside right now. So I think that what's going to happen is that it's going to price in these all these rate hikes that are coming. So probably what's going to happen now is that we're saying there's going to be 2 rate hikes, and now after the unemployment number that just came out, now they're probably going to say there could be 3 rate hikes before the end of the year. So pay attention to those news. The news, I would not be surprised if that happened. Let's get over to the Mag 7 here. We'll start with NVIDIA like we've been doing for the last couple of weeks now. I called that 213.99 high yesterday. Needed to get through that in order to push to that 219.09 level. We are above the 20 sitting at 202.29 and sitting above the 100-day moving average at 199.16. Pull back long, maybe into this 204.13 would be a good level. If you lose that, then you have the 20 there for support. You have this upper regressional trend line that I have here sitting here from middle of May of this year. And then, of course, that 199.34 low from June 9th. If you lose the 100, you come down to the 200 at 192.69, and this midline regressional trend line here sitting at 191.53. Okay, let's move on. Apple, one of the strongest stocks these days. Like to see if we could get above this previous hold this with 323.45. It was an all-time high until we popped through it, and then we created new levels. You can see right here we are below the close yesterday, 325.89. If the market popped up there, maybe a pop and fade wouldn't be bad. If we lose 323.45, then we go back to a high that was sitting there for quite a while, 317.40. I like this pullback to this level right here. If you flush through that 317.40, 100 or 20-day moving average at 310.06, and then below that we have the 50-day moving average, along with this higher end regressional trend line here from October of 2025. So I'm looking for, if I was trading Apple, I'd be looking for pullback longs. It's one of the strongest stocks out there right now. So right now, this could be just consolidating. Look at, look right here, this like little range here, 322, call it between 322 and 329, right? So it could be consolidating, waiting for a breakout. So I'm not overly concerned about the pullback that's happened right now because it's been nothing significant. Okay, let's get over to Meta. Let's try to fly through this right now. Meta lost the 20-day moving average right this morning here, 615.95. I think a lot of the stocks are probably going to be losing their moving averages based on that data. Understand you could be two types of traders. You could be a technical trader, of which I am. I'm actually a combination of technical and fundamental trader. So I'd use my levels for technical, and then fundamentals, when fundamentals are coming out, like if you have some earth-shattering news or economic news, that trumps your technical data. So you have to wait till the news gets filtered out, and then you use your technical levels for trading. So if the market's moving, heavy in one direction, you can't get in front of a moving train one way or the other. But so by the time the market opens for us, all the news is going to be in the market, and it's going to be siphoned out from all these fund traders, and we'll find our direction at some point today. So. Also, just keep in mind, we're in earnings season right now. So next week, there's a heavy batch of companies that are going to be reporting, and I'll go over that in my weekly newsletter that's put out on Sundays, and I'll also cover it in my morning pre-market analysis. Got to hold this 50-day at 606.11 level. If you lose that level, you have this regressional trend line I have here from October 29th of last year at 625. On the upside, if you can get through yesterday's close, 627.17. I think you could push in and create, cover this speed zone here up to this upper regressional trend line here, and that is the same line that I was talking about down here in the midline range, 637.37. It's also sitting just below the 200-day moving average at 639.20. If we do get something that it pops above that 200-day moving average, then I think you could push into that 677.86 level, right? But you just got to pay attention to things. It's been stair-stepping down, consolidating, lower, could go consolidating, and then maybe another push on the downside. If you lose this midline, you got a 592.66 level. It's a high from April of last year, a monthly high from April of last year, and then below that 572.25. It's a high from June of this year. So could be consolidating here. If you regain this 20-day moving average, you could be stuck in here in between this 615 and 639 level. Okay, let's get over to Google. Google got smoked yesterday too, just with after their I think it was all about their capital expenditures, their outlook for that. So created a nice little speed zone there though. So if you regain that 333.69, you could push back up into this regressional trend line here. It's 339.17. And then if you do have power there, you could push back up into the close from yesterday, which I'm not sure if that's going to happen based on this economic data that came out. But if you do, it doesn't necessarily have to be today. You'll probably get some headwinds up there at 343.55. If you could push above those levels in this 344.12 high, then you could possibly push into this 348.10 level. This was a great level that we had yesterday, right? So it was kind of hanging around below that level all day. The news came out, the earnings, it popped up, hit the 20-day moving average, and it popped off that 20-day on a T. Also, that 352.83 level, it's a June 24th high of this year. So that's going to be a significant level in order for it to continue to push higher. It's going to have to rally back to those levels. On the downside here, if we lose this 200-day moving average, the 200 days, we're sitting right on it right now, 322.98 level. You've got a weekly high here from this year at 319.39. If you lose that, there's a fair value gap that I have structured down here from March of this year at 310.75. You could bounce off of that level. So that could be a decent level to bounce off of. But with fair value gaps, if you blow through the fair value gap, then I think you're going to get more downside. So if you blow through that 310.75, I think 287.57 could be feasible there. It's a low from April of this year. And then below that 287.57, I don't have anything down there. I don't expect us to get down there today. As we move lower, then I would put some new levels on the charts there. Okay, let's get over to Amazon. Amazon has just kind of been a chop fest, but now you got a little structure yesterday after the close there. So same thing on Amazon and all the rest of them. Like I said, we're probably going to be below a lot of the moving averages right now. So that is pop and fade material. You're below the 100-day moving average at 240.92. We are in between, though, the 200-day moving average at 234.46. So I don't mind a long off of this level with a stop possibly at that 233.80 level. And then on the downside, or on the upside here, if you can regain this 100-day moving average, 240.92, you probably push into this 242.70 or 243.61 level, which is going to be the 20-day moving average today. And then above that, you have the close from yesterday. So there's a bunch of headwind levels up there. On the downside right here, I don't have much here after this 234.46 until we get down to 226.10. So, watch those levels right there. But when you get in these sell-offs in pre-market, post-market, it creates a nice little speed zone there too. So if you do start to push higher today, tomorrow, whatever, pay attention to these levels, because if you blow through these levels, then you can recoup all the downside right here. So the downside could be long covers and then combined with new positions. And so those new positions would be, having a little bit of a short squeeze trying to push to the upside there. Okay, let's get over to Microsoft. Microsoft right now. Microsoft is another one that's been in the penalty box here. So holding the 20-day moving average, 384.64. Not bad. I like that. In order for Microsoft to continue to move higher, and then this is a beautiful speed zone right here for Microsoft. So if you can push and pop above that 393.76, I love Microsoft to regain this whole thing back up to 399.23, which is the 100-day moving average. And then above this 432 level, beautiful. Then you can push in that 413.05. Do I think that could potentially happen within the next couple of days? Yeah, you never know, but I think that a lot of these moves are probably going to happen over the weekend. They usually have big moves up or down over the weekend when you come in on Monday morning that, create a gap up or gap down. But we talk about speed zones all the time, right? So we talked about this beautiful move that we had the other day, and I said that that's creating a speed zone, and lo and behold, boom, other speed zone. But the speed zones go both ways, right? So this one-sided selling that happened yesterday in the first 15 minutes, call it first 45 minutes of the day yesterday, that was long covers for sure. And then new positions being made, probably new positions being made right here at this 393.36 level, right? So long covers, right, and new positions. The new positions are what's going to create that speed zone. So when these shorts realize, oh, I may be wrong, then they're going to start buying it up, and that's where you get your short squeeze. Okay, so watch these levels right here. If you do fold and if you do flush and you lose that 20-day at 384.64, I've got a 381.90 level. It's a low from June. It's a weekly low from June of this year, and then below that, I've got this upper regressional trend line at 377.21. If you lose that, then you've got a monthly high. You've got a weekly high from June 30th of this year, 374.39, and below that, we don't have anything until 366.84. So hopefully we can get this speed zone covered by the end of today or maybe even tomorrow. That would be fantastic, and then we can get back off to the races. But it's going to be a volatile, a choppy next couple of weeks because you have so many earnings that are coming out. Okay, let's get over to SpaceX and we'll cover Tesla and we will get going for the day. SpaceX, dog. Like I said, not trading it, not enough liquidity in the market yet. You got to wait till that lockup is over. There's got to be more float. And when that more float comes, this could potentially get down to the 30s in my eyes. I'm not saying it could happen it could happen. I'm not going to say it will happen. I'm saying it could possibly happen because there's just not enough float. So if they want to create more float, they're going to issue more shares to the market. And what happens if they issue more shares to the market? They do splits, and then the stock price comes down to reality personally. Because unless they, I know there are talks about they're going to merge Tesla into SpaceX, and that'll probably give it a pop. But currently, SpaceX is not making money, and they threw their satellite company in there because the satellite company was the only thing that was making money. They threw their AI company in there, which was not making money. But the satellite company is making money, and that's why they threw it in there so they could try to help soften the blow on people buying the stock on the come. Okay. Downside here, 109.39 is the only level I have below us. It's uncharted territories. It's a Fibonacci, 127% is a Fibonacci level that I have there. On the upside, you just got to watch your levels up here. We do have a point of control that was just created from yesterday. I'll mark that for everybody if they want it. So we got a 7, 22, 26 point of control. And these point of controls, they tend to fill. And we were going to get into Tesla and talk about that right now. So We do have a point of control up here, 123.61. So if the market did pop up there, you could expect a little resistance and possibly a pullback. So you can see all these point of controls are filled. This one is still open at 148.04. So that's good for the upside, right? Okay, so let's get into Tesla, which we love to cover. Tesla, here we go. This point of control I've been talking about since September of last year, 333.97, getting closer to that one right now. I talk about it all the time. I talk about these open point of controls that we have. And the good news is, all right, I know the market's flushing right now, but once we close this 333.97 level, that will be the last of the point of controls that we have open on the downside. And then on the upside, we have a whole slew of open point of controls. We've got one. This is going to be messy for you, so I don't want to really, maybe I can just go over here. So here we can show point of controls. That's a little better for you. So you can see when a point of control gets filled, I'll write filled on it because it still becomes a pretty decent level, right? So you can see this one level here that got filled on May 1st. It's sitting right on the 20-day moving average, 394. 62 between 62 and 86, right? So now on the upside, we have an open point of control of 408.98. We have an open point of control of 424.39. We have an open point of control of 444.31, 455.12, and I believe the last one is at 478.39. So that's all positive stuff. However, Tesla's on a little bit of the penalty box right now, so you got to watch it. They had earnings yesterday, of course. And I think at some point it'll flush a little bit, and then maybe there'll be some news that'll come out and pop it. So it's, this kind of stuff right here, this wickiness right here. I know, I've been talking about speed zones. Right here, it could potentially be a speed zone, but these wicks kind of always throw me off. So in order to see Tesla start moving back to the upside, you're going to have to get above this 365 level. Actually, I got some different levels that are better here. Let me go over here. All right, so these are. Take a snapshot, put these levels on your charts right here. So in order for Tesla to stop the flush, it's going to have to close above this 367, 368 level. It's a June low. So as I was saying before, when you're below the moving averages, the 20 and the 100 are sitting right on top of each other up there at 394.62. You're looking for pop and fades. So you have to look for your levels for a nice pop and fade. So this 61.8% Fibonacci level at 361.30 is a pretty decent level. I don't mind that level. If you popped up there, you could see what it did in post-market yesterday after the earnings call. So that's going to be a pretty decent level, and we'll see how the market reacts to it when it opens up. Downside, here's your 333.97 level. I am not saying, okay, let's buy puts right away because it's going down there. I'm saying it could go down there. Probabilities and all my data that I've worked on says the probabilities are high. The percentages are extremely high. I'm not going to give you a percentage because I don't want to be held to it. But these point of controls close. Do they close right away? No. We had a point of control that was open for an entire year last year, and it closed. And the point of control that was open, it was at $417. And I believe Tesla pulled all the way back to like $200. However, by the end of the year, that 417 was filled. Okay, so put these levels on your charts and watch them. Below this 33.97 level, if we lose that, we've got a weekly low here from September of last year at 325.60, and then a 50% Fibonacci retracement here at 318.82. Below that, you've got a 299.29. It's all possible for Tesla, right? You're talking about a 299 level. It's not far away. Everybody knows Tesla can, rip your heart out for like $25, $30 in a day, like no problem. It could do it in 15 minutes, right? So watch it. This lower end regressional trend line could be a decent level of a pop and fade here too. 352.93. This regressional trend line I have here from the all-time highs set back in December of last year, and we are losing it right now. So you lost that lower end regressional trend line, right? In order for Tesla to push higher, you need to regain that level. You could use that as a pop and fade. So watch your levels today on that. So put these levels on your charts, and you can have them on there for trading, right? What are we going to do for today? For today, we're using tomorrow's expiration date, and I'm going to have the 355 calls. You can see we're below 355 right now. They closed at $23.10. That's what you call an IV crush, implied volatility crush. That means that the premium prices are very expensive until the earnings call come out, and then when the earnings call comes out, then they get crushed. So you can see right here, if you put this premium, this strike price of 355 calls expiring tomorrow on your charts, you're going to see when this opens, this is going to go from $23 probably in the $2 range. Okay, you're going to lose. You're probably going to lose over $21 on this. Okay. Now on the positive side for the premium on the puts, 335 puts expiring tomorrow now. So you watch this. So this $1.82 on the 335 puts, this will probably open up in the high twos, maybe even in the threes because it's flushing. So you're gonna watch that. I may switch these, as the market moves. However, we do have a couple days to play around with these. So if you do get in a bad trade, it gives yourself a little time to work out of. So. Anyways, that's going to be it for today. Again, if you're new to the channel, subscribe to the channel. Go to our website, QOLtrading.com, so you can join our weekly newsletter that we put out every Sunday. And then also down in the description, you can join our Discord community by clicking on the WAP link, and you can join for free. You can upgrade to the trade room. You can also get access to our QOL ORB Scalper for another subscription as well. So if I don't see you in the trade room at 9:30 a.m. to 11 a.m. Eastern time, I will see everybody tomorrow. Have a great day. If there's anything you want me to cover, also don't be afraid. Leave a comment down below.